Welcome to Griffonomics.
Be glad to be here for this one.
So imagine this scenario. A local police department seizes a locked, fully encrypted iPhone, and it belongs to a major cartel boss.
Right.
Apple is definitely not going to unlock it, Google won't touch it, and the suspect obviously isn't just handing over the passcode.
No, of course not.
So how does the FBI actually get inside to find the supplier? Well, they pay a toll. They plug that phone into a highly specialized piece of hardware, they run a proprietary exploit, and they extract the data.
Exactly.
And today, we are taking a deep dive into the company that essentially owns that toll booth, Cellebrite, ticker symbol CLBT.
Yeah, and it's a completely fascinating company to unpack right now because, well, they are at a massive pivot point.
Right.
Historically, if you looked at a company building physical extraction devices and like USB cables for law enforcement, you would entirely expect the financial profile of a hardware manufacturer.
Heavy capital expenditures, right.
Right, heavy CapEx, lower gross margins, and revenue that just wildly spikes or dips depending on upgrade cycles.
But the narrative that management is pitching to investors today is completely different.
Oh, completely.
They are claiming that Cellebrite has basically broken out of that hardware box.
Mm.
They've transformed into this highly lucrative capital-light enterprise SaaS and agentic AI powerhouse.
Yeah, that's the pitch.
So our mission for you on this deep dive is to figure out if that's actually true. Has Cellebrite completed this transition into a secular SaaS compounder, the kind that justifies a massive premium software valuation?
Or is this just, an overvalued tech play masquerading as a cloud company?
Exactly. And to get to the bottom of that, we are tearing into a really dense stack of sources today.
It's very dense.
We've got their Q1 2026 earnings transcripts, some incredibly granular financial reconciliation tables, and recent strategic investment reports covering their M&A activity.
Right. And I think the absolute best place to start measuring this supposed transformation is by looking directly at their customer dynamics.
Let's talk about that dynamic, because I've been calling them a judicial toll road for a reason.
It's a great analogy, honestly.
Digital investigations, they are just no longer a luxury for law enforcement. They are mission-critical infrastructure.
Right. You literally cannot prosecute a case without it.
Exactly. You simply can't prosecute a major financial crime or a trafficking ring or even a counterterrorism case today without cell phone data, cloud backups, or, encrypted messaging logs.
Which creates this incredibly captive market. I mean, if a federal agency or a local police precinct wants to conduct any kind of modern investigation, they have to drive on that road.
They have to pay the toll.
Yeah, they pay the toll. And because of that structural reliance, Cellebrite's customer churn is sitting at near zero.
Wow, near zero.
Yeah. They're essentially a public utility for digital forensics at this point.
And that utility status really shows up in their financial baseline for Q1 2026. Because if you look at the top line print, it looks very strong.
It really does.
Gross revenue jumped 19.3% year over year to $128.3 million. And for anyone tracking the SaaS narrative, the critical metric, total annual recurring revenue, or ARR, grew 21% to hit $493 million.
But see, you can't just stop at the top line ARR.
Right.
If we're doing proper margin forensics here, we really have to audit their non-GAAP reconciliation tables. And when you do that, there is this massive delta that absolutely needs explaining.
Yeah, it's a glaring discrepancy.
Right. They reported a GAAP net income of only $10.9 million. Yet their non-GAAP net income was reported way up at $30.6 million.
Right. Okay. So for anyone listening who isn't like a forensic accountant, let me translate that gap.
Go for it.
On paper, under strict accounting rules, Cellebrite looks like they only made about $11 million. But when management adjusts the numbers to show what they consider the quote-unquote real cash-generating power of the business, it's nearly triple that amount.
Yep, $30.6 million.
So what exactly is hiding in that nearly $20 million gap? I mean, if they are a clean software business, why is there so much accounting noise?
It's a valid question.
Yeah.
It's a $19.7 million differential, to be exact. And to figure out what kind of business this really is, we have to separate transient one-off noise from permanent structural costs.
Okay, let's start with the structural side.
Sure. So the bulk of that gap comes from permanent non-cash items. Specifically, $14.4 million in share-based compensation, or SBC,
Okay.
and another $5.0 million in the amortization of intangible assets.
All right, let's unpack those two things because intangible asset amortization sounds like, total corporate jargon.
It really does.
But it essentially just means that when Cellebrite bought other companies in the past, they acquired patents, code bases, and customer lists.
Right, the intangibles.
Exactly. And those invisible assets lose value on paper over time, which obviously drags down the official GAAP profit, but it doesn't actually cost Cellebrite any physical cash today.
That is spot on. It's a pure accounting artifact. However, the share-based compensation, the SBC, is a completely different story.
Yeah, you can't just ignore that.
No, you can't. And management is actually very transparent. The SBC is a permanent structural part of how they operate because it's how they retain elite talent.
Right, because think about who they are hiring.
Exactly. When you are trying to hire highly specialized vulnerability researchers who can crack zero-day encryption on an iPhone,
Yeah.
you're competing against Google, Apple, and the NSA.
Right.
You have to pay them in stock.
And as an investor, you can't just wave away SBC. Like, it doesn't matter. I mean, you are diluting your existing shareholders to pay your engineers. It is a very real cost of doing business.
It absolutely is a real cost, but it is non-cash. So combine those structural items with what we call transient noise.
The one-offs.
Right, the one-offs.
Yeah.
This quarter, they took some hits for non-recurring events that temporarily compressed their GAAP profitability. They spent about $109,000 on M&A integration outlays.
Okay, that's not huge.
No, but they also had to absorb a pretty heavy cash component for executive severance packages, specifically tied to their former CFO's transition out of the company.
Okay, so if I'm an investor trying to model their future cash flows, paying out a massive severance check to a departing executive is a one-time hit.
Exactly.
It's not predictive of how the core software business operates day to day.
And that's the key takeaway. Because once you strip away that temporary noise, the underlying engine reveals a highly optimized software profile.
The margins are crazy.
They are. Their non-GAAP gross margin is sitting at an elite 85.9%. And their trailing 12-month free cash flow margin is 32%.
Wow.
You simply do not generate those kinds of cash conversion metrics selling hardware cables and plastic dongles.
Right, you just don't.
It totally validates that their transition to their newer cloud-native software platform, which they call Insights, is actually working.
But, that transition to the cloud introduces a massive bottleneck.
Oh yeah, a huge one.
Because to scale an enterprise SaaS platform, you need your clients to actually migrate. They have to move from their local on-premise desktop computers up to your cloud servers.
Yep.
And Cellebrite's most lucrative clients are federal agencies, right? The FBI, the DEA, the ATF. And I don't know about you, but the federal government is not exactly famous for adopting cloud software quickly.
They are notoriously slow.
Yeah.
The bottleneck is entirely around the security regulations. In federal sales, getting an authority to operate an ATO is just a total nightmare.
Right.
A single agency might literally spend 2 years and millions of dollars running their own localized security assessments before they are allowed to upload any sensitive data to a commercial cloud.
And this is where the sources show Cellebrite found a VIP FastPass, essentially, to bypass that bottleneck.
They did. On May 6, 2026, the Cellebrite Government Cloud achieved FedRAMP High authorization, specifically Level 4.
Wait, Level 4?
Level 4, which is the absolute highest security control baseline for federal unclassified systems. You have to clear over 400 distinct security controls. Yeah, it covers everything from exactly how the data is encrypted at rest all the way to the physical security protocols at the actual server locations.
But the really crucial detail here isn't just that they got the certification, it's who sponsored it.
Yes, the DOJ.
Exactly. The Department of Justice directly sponsored Cellebrite for this authorization. Think about how much that changes the sales cycle for you.
It changes everything.
Instead of the FBI or the DEA spending 2 years building their own security assessment from scratch, they can look at the DOJ's clearance and say, hey, the DOJ already cleared this for Level 4. We will just use their homework.
Right.
It is the ultimate do once, use many compliance shortcut.
And it drastically accelerates procurement. We can actually quantify the financial velocity this unlocks.
Let's hear the math.
So currently, Cellebrite's U.S. federal ARR baseline is roughly $86 million. Now, when an agency finally gets on block and migrates from legacy desktop setups up to the cloud-native Insights platform, Cellebrite bakes in a pricing uplift of about 10%.
Okay, so they get an automatic 10% raise just for moving the client to a more efficient architecture.
Exactly. Plus, Management explicitly noted that their federal pipeline is already up 35% year over year.
Wow, 35%.
Right. So when you combine that 35% pipeline growth with the 10% cloud migration uplift, all of which is suddenly unblocked by this DOJ FedRAMP shortcut,
Yeah.
this segment alone has an expansion velocity that could realistically drive an additional $20.6 million to over $30 million in net new ARR.
Just from the federal side.
Just from the federal side over the next year.
Okay, so we've established they are successfully pushing these massive federal agencies into the cloud.
Right.
But once those agencies actually get there, they hit a brand new wall.
The data wall.
Exactly. They are completely drowning in digital evidence. Think about it. If you extract 3 suspects' phones today, you aren't just getting a few text messages anymore.
No, it's terabytes of data.
It's terabytes of location data, deleted photos, encrypted app caches, and literally years of massive group chats. No human investigator can possibly read all of that.
No, they can't. The bottleneck completely moves from the physical extraction phase over to the analysis phase. And Cellebrite's solution to that is a public safety-grade agentic AI platform.
Right, Cellebrite Genesis.
Yeah, Cellebrite Genesis.
And the adoption metrics on Genesis in these reports are wild. They already have a surge of over 500 registered beta users across 15 different countries.
Which is huge for a beta.
Right. And these aren't just random users. These are elite federal intelligence units acting as design partners. They're using this AI to compress an investigative review cycle that used to take, 3 weeks, down to about 15 minutes.
The technology itself is incredibly impressive. But the business model behind it is what actually alters the financial trajectory of the whole company.
How so?
Well, they are not monetizing Genesis with standard fixed-per-seat software licenses. They are using a variable tokenized consumption model.
Okay, I really want to break down exactly what a tokenized model is, because this changes everything for their revenue.
Go ahead.
Think of a token like a digital casino chip. Every time an investigator asks the Genesis AI to, say, summarize a 10,000-page text thread or scan a massive hard drive for a specific suspect's face, they spend a chip.
Right.
And the more complex the query, the more chips it costs.
Exactly. And this completely rewires their net retention rate, or NRR. Currently, Cellebrite's NRR sits at 115%.
Okay, I have to jump in here because I was looking at that 115% NRR figure in the financials earlier.
Yeah.
And in the pure enterprise SaaS world, companies like Snowflake or Datadog, 115% is solid, but it's not elite.
That's true.
You really want to see NRR pushing 120% or even 130% to prove that existing customers are wildly expanding their spend every year. So why should we be impressed by 115% here?
In a legacy fixed-seat model, you'd be absolutely right to want more, because with a fixed license, a police department just pays, let's say, $10,000 a year for the software.
Right.
Whether they investigate one single crime or 1,000 crimes, Cellebrite only makes $10,000. It artificially caps the revenue. But tokenization completely shatters that cap.
Because the revenue scales directly with the data volume.
Exactly. As the volume of digital evidence inevitably grows, and as the crime rate fluctuates, the token burn increases automatically.
They just run out of ships faster.
Right.
Right.
The agency doesn't have to call up Cellebrite and sit down to negotiate a brand new contract to get more value out of the tool. They just consume more tokens to get the AI to analyze the mounting pile of data.
So it basically creates a frictionless mechanism for ARR expansion.
Frictionless, exactly.
And by layering this uncapped variable consumption AI revenue on top of their predictable SaaS-based contracts, management estimates they can effectively capture a $12.5 billion public safety total addressable market.
This is a massive TAM. So they have the centralized cloud architecture lockdown, right?
Right.
But you can't push a seized piece of hardware to the cloud if you were literally standing in a trench on a battlefield.
Or raiding a compound in the middle of nowhere with 0 cell service.
Exactly. That creates a massive operational blind spot for them.
Which perfectly explains their latest acquisition. On March 1st, 2026, Cellebrite paid $17 million in cash to acquire a company called SEG Canada, Inc.
And this is totally outside their usual wheelhouse.
Right, this isn't about cell phones at all. This is pure drone telemetry. SEG allows agents to use these rugged, handheld field triage kits to instantly extract data from over 80 different commercial and military drones.
And the tactical mechanics of this are vital. If a military unit or, say, a border patrol team pulls down a hostile surveillance drone, they can't afford to put it in a plastic evidence bag and ship it to a lab in Washington, D.C.
It takes way too long.
Way too long. They need actionable intelligence in minutes, not weeks.
So they plug this handheld device directly into the downed drone, and it immediately bypasses the security layer.
Right.
It pulls the internal video caches, the cell tower connection logs, and the raw flight paths. It essentially draws a digital map right back to the exact GPS coordinates where the remote controller is standing.
And from an investment standpoint, this $17 million acquisition is a brilliant strategic wedge
Why is that?
because it aggressively pushes Cellebrite out of local police precincts and directly into sovereign defense and military intelligence domains. We're talking counterterrorism and sensitive site exploitation.
And the average selling prices, the ASPs in the military defense sector, are orders of magnitude higher than what a local municipal police department can afford.
Exactly. The budgets are massive. It also serves to heavily fortify their technical duopoly.
Right, because they do have competition.
They do. In the physical extraction space, their chief rival is Magnet Forensics, which recently merged with Grayshift and is backed by the private equity giant Thoma Bravo.
A very deep-pocketed rival.
Extremely deep pockets. And to maintain their pricing power and consistently defeat next-generation iOS and Android encryption, Cellebrite fundamentally has to out-engineer Magnet.
And the primary technical moat they are using to do that is something called virtual silicon.
Yes?
According to the reports, Cellebrite acquired a company called Corellium, which they are now running natively on Google Cloud infrastructure. And Corellium provides bare metal ARM virtualization.
Let's clarify the difference between standard emulation and true virtualization, because it's the absolute core of their advantage here.
Okay, break it down.
Most standard software emulators just try to translate and artificially mimic how an iPhone's microchip might react to a hack. It's clunky, it's very slow, and it's highly inaccurate.
It's basically like playing a hyper-realistic racing game using a computer keyboard.
That's a perfect analogy.
Right, like it sort of works to steer the car, but the physical inputs are completely wrong, and you can't really test how the car actually handles under real stress.
Yeah, exactly. But bare metal virtualization means Cellebrite has built an exact, pixel-perfect digital replica of the iPhone's actual physical silicon architecture, completely inside the Google Cloud.
Wow.
So their vulnerability researchers can spin up 1,000 virtual iPhones at once and test brute force exploits at the exact speed of real physical hardware.
That's insane.
They can crash the virtual operating system 1,000,000 times a second until they finally find a zero-day vulnerability.
Which obviously allows them to build extraction tools drastically faster than any competitor who is still relying on physical lab testing or clunky emulators.
Absolutely. The CEO of Cellebrite, Thomas Hogan, actually had a fantastic quote about this in the earnings call. He essentially told analysts an LLM with a USB cable is not going to replicate this.
Uh-huh. That's great.
It really is. It's a stark reminder that, yes, generative AI can write code, but it simply cannot physically bypass hardware-level encryption protocols without this kind of foundational virtualized testing environment.
Okay, so if we pull all these strategic threads together for a minute,
Let's do it.
you have a company with an impenetrable FedRAMP Level 4 compliance mode.
Yep.
You have a tokenized AI growth engine that automatically expands revenue as data volume grows.
Right.
And you have absolute technical dominance in physically extracting data at the tactical edge, backed by virtual silicon. This entire setup makes them a highly, highly attractive asset.
Which forces us to look at the biggest ecosystem player in this space, Axon Enterprise, ticker symbol AXON.
Axon, they build the police body cameras, the tasers, and that massive cloud storage system called Axon Evidence.
Right, and a lot of retail investors look at Axon's massive market cap and assume they will just eventually build their own extraction tools and completely crush Cellebrite.
I mean, it's a logical assumption.
It is, but the sources explicitly outline why Axon is not a displacement threat. They are a symbiotic demand catalyst.
How so?
Well, Axon is digitizing police workflows at an unprecedented scale. Every body cam video, every digital report goes straight into Axon Evidence.
Yeah.
But Axon absolutely refuses to get into the messy business of cracking encrypted hardware.
The liability is just way too high.
Way too high. Think about the engineering complexities.
Yeah.
The perpetual cat and mouse game with Apple. The immense legal risks of essentially state-sponsored hacking into a suspect's private phone. Axon has zero appetite for that regulatory headache.
So they created a functional split in the market. Here is how the integrated workflow actually functions in a real precinct today.
Walk us through it.
An officer seizes a locked phone. They don't plug it into an Axon terminal, they plug it into Cellebrite. Cellebrite is the diamond-tipped drill bit that breaches the vault.
Right.
It cracks the encryption, accesses the file system, and generates a decrypted forensic report, which is called a UFDR file.
And through a deeply integrated API, that UFDR file is automatically pushed directly into Axon's cloud storage.
Exactly. Cellebrite acts as the extraction engine, and Axon acts as the secure master archive for the prosecutors.
And this workflow raises a massive, massive question about M&A and take-private probability. If you are Axon, or frankly a massive private equity firm, acquiring Cellebrite makes perfect strategic sense.
It's the ultimate strategic roll-up.
It really is.
Hmm.
Buying Cellebrite would give a company like Axon a total, absolute monopoly over the entire life cycle of a criminal investigation.
From start to finish.
Right. From the initial 911 call and body cam footage recorded on the street to physically extracting the encrypted device at the precinct, straight through to storing the AI-analyzed evidence for courtroom presentation. You own the entire chain of custody.
Furthermore, if Axon were to acquire them, they would instantly inherit Cellebrite's FedRAMP Level 4 clearance.
Oh, that's huge.
Right. For a company constantly trying to expand its federal footprint, that clearance is a massive backdoor for cross-selling their broader product ecosystems into top-tier, highly restricted federal intelligence accounts.
You do have to factor in regulatory friction, though.
True.
Because Cellebrite's extraction technology is officially classified as a dual-use cyber weapon, any acquisition would have to navigate severe CFI-US proxy structures in the U.S., as well as incredibly strict Israeli defense export controls.
It definitely wouldn't be a simple, clean transaction.
No, but the strategic rationale is undeniable.
Which brings us right back to our initial mission today. We set out to determine if Cellebrite is truly a secular SaaS compounder that justifies a premium software multiple, or if it's just an overvalued hardware play.
And based on the margin forensics, the transition to a capital-light enterprise SaaS architecture is definitely succeeding.
They certainly have inherent risks, right? They are heavily exposed to public procurement cycles, and they are locked in a perpetual, wildly expensive encryption arms race with Apple and Google.
They are, but the numbers don't lie. Their 85.9% non-GAAP gross margins, their token-fueled 115% net retention rate, and their $30 million plus federal expansion pipeline tell a very clear story of software dominance.
Yeah, they have built highly protective compliance and technical moats that firmly justify a premium software valuation over traditional hardware multiple.
They have absolutely successfully built and monetized the main toll road for global judicial data.
They really have. But I want to leave you with a final thought to ponder today.
Okay.
We've spent the last 15 minutes talking about how incredibly efficient and financially powerful this technology is from an investment perspective.
Right.
But as Cellebrite's agentic AI and their virtual silicon and their drone telemetry tools become deeply structurally embedded across U.S. federal intelligence, allied militaries, and thousands of local police forces, all connected and analyzing data via a centralized cloud.
It's a lot of data.
It is. At what point does a single, publicly traded tech company hold too much unilateral power over the globe's judicial and intelligence data infrastructure?
Wow. Yeah, when you centralize that much raw investigative capability, it becomes a really profound question about the privatization of national
It
security.
really does. Risk defined, portfolio protected.